explain how we're going to run this to everybody.
Okay, we're recording.
Okay, let's go. Right, nice to see you all. The plan is for me to talk for just under an hour, I would think, and then we can take questions at the end, if that's okay with you. I'll also be giving you my email address later on, and you'll be more than welcome to contact me if you've got queries that you don't want to ask in front of your friends online, such as I've just won £1 million on the lottery and I need to know if I have to pay tax on it or anything like that. Thanks to Harry, Student Union President, lousy job, for inviting me this year. In my experience, Student Union Presidents have a reputation for asking questions that no one can answer. And I'm pleased to see that Harry is following in the tradition. Harry said that the topics for tonight's webinar came through student conversations. I'm not quite sure what student conversations mean. In case you didn't have one of those conversations, here are the topics that we're supposed to be looking at. And I'm going to read this off my printout. Question number one, what is financial literacy? I mean, my God. Question two is budgeting to manage your money, especially when freelancing. Number three is setting financial goals. Number four is paying bills and saving money. That's an optimistic one. Number five is credit cards and credit scores. And then we're finishing off with a brief overview of tax, my favorite subject. I've been doing this sort of talk for about 40 years now, and this is probably the most difficult set of topics I've ever had to deal with. And if I'm honest, in some cases, there really aren't helpful answers, especially at the moment, when many of us, and I'll include myself, really haven't got any income. So I suppose the first thing I have to do is to ask you to think about the music profession itself. In many ways, it's one of the riskiest professions that there is. There's a permanent lack of money. There's a real shortage of work, and there's no security. And that's why questions about things like budgeting and setting financial goals are so difficult to answer. Is it unreasonable to say that I hope you're aware of this already, that the profession is not an easy one to be working in? You've all chosen a career in the music profession, I suppose, unless somebody else chose it for you, which does happen on occasions, I'm afraid. And I hope you're aware before you decided to join the music profession what it was like before you actually made that choice. Anyway, I'm going to work my way through Harry's list of topics, and then we can pick up some other issues on the way. And let's start with the hardest one, which is, what is financial literacy? It's actually a very difficult question, and I'm not sure we really need to answer it, but I did look it up on a website called Investopedia. And this is what it says, deep breath. Financial literacy is the ability to understand and effectively use various financial skills, including personal financial management, budgeting, and investing. Financial literacy is the foundation of your relationship with money, and it is a lifelong journey of learning. The earlier you start, the better off you will be, because education is the key to success when it comes to money. I'm not going to read all that again. I mean, that's all very well, but the trouble with that definition is it assumes that you have money, which most of you probably haven't. It assumes that you like it. It assumes that you're interested in it, and that you don't just think of it as an inconvenience, and that you really do want to have what they call a lifelong journey of learning about it. Now, I do know some musicians who love playing with money. I've got one friend who got deeply into stocks and shares, and another one who was trading in what are called financial derivatives. The first of the two friends lost nearly £75,000 on the stock market. It wasn't a great success. The other one did rather better. I think he gave up after he'd lost only about £15,000. Don't get me wrong, I'm not saying that all musicians are bad with money, and I do know some that have made a lot of it, and some have gone on to make even more by knowing how to make the money work. But to be honest, most musicians really don't have a clue about money, and that makes them, you, me, very vulnerable to all the quick the get-rich-quick adverts that you see around on the web at the moment. My own definition of financial literacy goes something like this. It means knowing how much money you need, being realistic about how much money you're likely to have, and knowing what to do with the difference between those two figures. Or to put it more simply, you have to know what to do if you don't have enough money to live on, and you mustn't throw away your spare cash if you have more than enough to live on. Or I suppose in two words, it means be careful. It means be careful. If making money is so easy, then why haven't all the professional financial advisors retired yet? To make money, other than by earning it, you need to know how the system works, and you need to have enough money that you're prepared to lose. And to be honest, you need a hell of a lot of luck. Let's go back to those two words, be careful. I think you ought to write that down. If anything else you write down tonight, be careful is the most important thing about being financially literate, I suppose. Okay, let's move on. Budgeting to manage your money, especially when you're freelancing. Is the word freelancing. If you were all going to have nice, steady jobs with a good salary and the prospect of regular promotion, then I could tell you exactly how to budget. The problem is that most of us, and again, I include myself here, most of us have very little idea of how much money we're going to be earning next month, let alone next year. And even when you think your income is pretty well guaranteed and safe, something can come along which completely blows everything apart. I mean, look at coronavirus. I've got friends who are at the very top of the music profession, but over the past year, they've been stacking shelves in Sainsbury's and delivering parcels for Amazon. So budgeting is not about how you plan to spend your money. Let's say that again. Budgeting is not about planning how you spend your money. It's about working out how much money you need. Budgeting starts with expenditure, not with income. So you start by adding together how much money you need to pay for the things you can't do without. Basically, that's your rent and your other housing costs like council tax and gas and electricity. It's food, it's essential clothing. I suppose it's your phone and your broadband bills. It's keeping your professional equipment in good working order. And most important, it's insurance of your instruments and your other musical equipment. I mean, is insurance really that important? And the answer is yes, absolutely. Because if something awful happens, I mean, a fire, theft, an accident, and you've got no insurance and no spare cash, you can't even work. Insurance for a musician is where you start from. Let me give you an example of what happened to one of my friends. It's 2 years ago now. He's quite a well-known violinist, and he's actually on the staff at the Guildhall. And he had a lovely violin, a Guarnerius, worth about £500,000. He was in love with this instrument. He used to take it to bed with him. It never left him. And he got home one night from doing a gig, and it was pouring with rain, and he got out of the car and he ran round to the back of the car, and he got his suitcase and his fiddle out, and he put them on the ground, and he took his suitcase and put it by the front door and jumped into the car and reversed back into the garage over the violin. All right, it was squashed absolutely flat. Now, this is a £500,000 instrument, and he's just run over it, but he's insured. Now, what did the insurance company do? First of all, they paid to have it put back together again. I mean, it's absolutely crazy, but they managed to find a restorer who got all these tiny, tiny bits of wood, and they glued it all back together again. And he now had what was a Guarnerius violin, and it was worth a few £1,000s. So they got it valued for him, and then they paid him the difference between what the violin was worth originally and what it was worth when they glued it together. Now, without the insurance, he would literally have lost nearly £500,000. He wouldn't have been able to play. That would have been the end of his career. For you, you're even in a worse position than that, because you've probably got no money left. And if all your instruments and your equipment and everything disappeared tomorrow because there'd been a fire in your flat, that would be it. And I have known musicians who weren't insured when there was a fire or a burglary or a car crash or something, and that has been it. They've never worked again. So please, please, please include insurance in one of your absolutely fundamental survival budget calculations. Yeah, it is so important. I had my instruments stolen twice. Happened to me, both from the house many, many years ago. On both occasions, I got them back eventually, but for the second time, it was 4 years. And without insurance, I don't know what I would have done. So what else, apart from things like your rent and your food, are essential expenses? Things like eating out? Not really. Going on holiday? Not really. Upgrading your instruments? A good wine cellar? All very nice, but not absolutely essential. So you start by working out how much money you need every month just to survive. And the next step is to do whatever it takes to guarantee that you will earn at least enough money to cover your survival budget. Freelancing is all very well. I've done it myself for 40 years. But some regular earnings that you can rely on are pretty well essential. They might come from some teaching in a school, or maybe from regular private pupils, or possibly from something like a weekly solo gig playing background music in a hotel. You may even persuade your parents to send you a regular amount of money to help you in the early days of your career. But you need to be able to stop worrying about the fact that the phone isn't ringing as often as you might like it to. You need to know that your survival budget is covered and taken care of. And don't forget to allow for the fact that your earnings will be taxed and that you'll have to pay national insurance contributions as well. National insurance starts when you're earning only £6,515 a year. That's not very much. So tax and national insurance need to be allowed for before you know that you're balanced up your survival budget. You also need to allow for the costs involving earning the money that you need to make. And that's going to include things like the cost of getting to work and maybe some other running expenses for your business. If it doesn't add up, if it doesn't work, do remember that there are benefits that you can claim if money is really, really tight. You can claim a reduction in your council tax. And of course, at the moment, you're not paying it because you're students, but when you get out into the big wide world, that is going to be one of the things you have to pay on top of your rent. You can also get help with your rent if you can't afford to pay it. You probably know that there's a new system called universal credit. The other thing that's worth knowing about benefits like this is you don't pay tax on them. You can check online to see if you qualify for any of these government benefits, and particularly universal credit. During the current coronavirus pandemic, the universal credit amounts are all higher than they are normally. So if you're leaving college this year, and there's a fair chance that those higher limits will still be in force. So if you're short of cash, get on the Universal Credit's website and have a look, and you might find, to your surprise, you're actually entitled to some money. Now, that's the basic survival budget. I hope that money isn't going to be quite as tight for you as that forever. So the next stage of your budgeting is to allow for other expenses, which are pretty essential, but not really right down at the survival level. So you can allow yourself some expenditure on eating out and seeing friends and buying new clothes when they're not absolutely essential, or possibly on going to concerts or going to the cinema, or perhaps a holiday occasionally. Work out then how much these things are likely to cost you over the year and divide the totals by 12, and then you know how much extra you need to earn each month to cover the next level of expenses up from the absolute survival ones. But don't forget to allow for tax and national insurance. As work comes in each month, check it off against your monthly budget targets and see how it's going. If you've managed to cover your survival budget and the extra expenses budget, then everything's fine. But don't rush out and spend more money yet, because next month might be dreadful. If you've got a bit of spare cash left over, then start to put some of it away to cover the months when no freelance work comes in. There will be months like that. There'll be months like January, which are always terrible. There'll be months like August when there's no work around. Ideally, you need to have at least 3 months worth of your survival budget and your extra budget in your bank account before you start to feel safe. If that proves impossible, then some of the extra expenditure has to go. Perhaps this will just mean one fewer visit to the pub this month, but above all, don't spend money on non-essentials until you know where the money to pay for them is coming from. I'm going to say something about tax again. It's a boring subject, but it's really important. The biggest danger with freelancing is forgetting about it. If you're employed, if you're in a job, then you're taxed at source by your employer. And this means that you're free to spend whatever money arrives in your bank account at the end of every month. But self-employment, or freelancing, if you like, is different. You're paid your money in full, and the tax is then payable as much as 2 or 3 years later. And you can't spend that money because it's not yours. And even if you are seriously running out of cash, don't spend your tax savings. The tax office won't be very sympathetic if you tell them you can't pay your next tax bill because you spent your tax money on something else. They will fine you, and they'll charge you interest, and they'll keep charging you interest and keep fining you until you've paid your tax bill. And that's going to get you into an even bigger mess. So save for tax, put it away, don't touch it. If things are going well and you're easily covering your survival budget and your extra expenses budget, you can start to allow yourself a bit more flexibility. But it's still a good idea to allocate a specific amount of money to what you might call your luxuries every month, and then to see how things are going. I still do it after all these years. I do a monthly calculation of what I can afford to spend on the things that aren't essential. I don't think I'd have survived this last year with coronavirus without my monthly budget. It's been the thing that's got me through and the thing that stopped me panicking. Okay, I think the next thing on the list, God, this is hard work. The next thing on the list was how we set financial goals and paying bills and saving money. I suppose to some extent they both come under what we've been talking about, budgeting. But let's have a word about saving money if you're lucky enough to be able to do that. Savings rates are incredibly low at the moment. I think my bank is paying interest on my savings account of something like 0.05%. That means that we're all tempted to look at ways of earning more by taking bigger risks. I mentioned this in the financial literacy section to some extent, but let's dig a bit deeper into it. First, you absolutely cannot take any risk with your tax savings. Put this money in a UK bank account where there's a guarantee that you'll get compensation if your bank goes bust. And it does happen. I mean, it's been 10 years now since a bank has gone bust, but when we had the big financial crisis back in 2010, there were banks going bust and the government was buying them and rescuing them. I mean, the government still owns a number of banks. It's completely crazy. But what they did at the time was to guarantee up to, I think at the time it was £80,000 worth of your money if your bank went bust. So put your tax savings in a UK bank and you know that if anything happens to the bank, you're going to get your money back. If you want to earn a bit more interest, then you can use what's called a regular savings account. That's the bank account where you guarantee to pay a certain amount of money in every month. There are usually limits to how much you can pay in each month because the interest rates are so much higher, but there's nothing to stop you having a regular savings account with more than one bank. So for example, if you decide let's think ahead a bit, that you want to put £1,000 away every month to cover your tax bill because you think it's going to be £12,000 at the end of the year, which it could be if you're earning well, then you find a regular savings account with a really good interest and they won't let you pay more than £500 in a month, then open one bank account with one bank and another bank account with another and pay £500 into each of them, and you'll actually do very, very nicely on the interest. The end of the year, your tax money is all saved up and you've got a bit of extra because the interest has been accumulating. Then we need to think, I suppose, about your 3-month budget savings, if that's the word. I think you need to be a bit boring, I suppose, with your longer term savings. This is money that you might not need straight away, but let's not put it into something complicated like an obscure Caribbean tax haven or something like that. So the second amount of money you're going to save after your tax saving is something like money which you might need in 3 months' time, slightly longer into the future. Don't tie it up somewhere complicated. After that, I would think pension. I would think pension plan before you even start thinking about saving up for your first flat. A very small monthly contribution into a pension plan when you're still in your 20s can turn into a really big pension pot over a working lifetime of about, what, 40 plus years. Even £20 a month, which you could probably afford now, even £20 a month would be a good start. If money gets really tight and you've got a pension plan where you're paying an irregular amount, you can actually ask them to pause the contributions. It doesn't become a problem. But if you get it set up now, I can promise you won't regret it later on. If you're lucky still to have money left over, then I suppose you can start to think about risk in a slightly different way. Once you've got your tax budget, your 3 months extras budget, your pension plan all sorted out, then you can move on. Think of any money you've got left over in 3 pots. One of it is money to save for emergencies. One of it is money that you are saving for possibly things that might suddenly turn up. I mean, for example, you might suddenly discover that an instrument you've been waiting for has turned up on the market and you've got money that you can get at fairly quickly. Yep, I mean, emergencies turn up, which aren't always bad things. The third thing to think about is long-term savings, I suppose. And long-term savings often go up and down in value, but you should come out all right at the end of it if you're prepared to wait. So this could be something like a stocks and shares ISA, or it might even be that complicated investment in an obscure Caribbean tax haven that I was talking about. Or you might even decide to risk, and this really is risky, something like a cryptocurrency. But don't say I didn't warn you if it all goes horribly wrong. But look, above all, most important, never ever invest money in something you don't really understand. Marketing of financial products promising you enormous returns is everywhere at the moment. And the people who are paying for that marketing are expecting to make money out of you. They're not a charity. So the people who provide all these specialist financial products where you expect or hope to make thousands and thousands of pounds, they themselves are making money, and they make that money out of the fact that you're investing in the products they recommend. They're not a charity. They're not doing it to help you. They're doing it to make money out of you. So don't invest in anything before you absolutely understand what it is. If in doubt, don't do it. Bitcoin is the classic example. Last year, Bitcoin, I think, was worth about £4,000 each. They're up to about £65,000 each. If you bought one, you'd have made about 50,000 quid. Brilliant. But I can guarantee at some stage it will go back down to 4,000 again. And if you bought at the top and you end up at the bottom, you can lose money just as fast as you can make it. So just be careful. Let's have a word about credit cards and credit scores, to some extent they go together. Credit cards can be really useful. I got my very first one just after I left the academy, and the very first thing I bought with it was my tails suit. It's the one I'm still wearing, but at least I can still fit into it after all this time. So why are credit cards so useful? First, there's the convenience. Although debit cards have taken over to some extent, but it's the point that the money is taken out of your bank account once a month rather than every time you use the card. With a debit card, you need to know that the moment you pop it in the machine or whatever, that the money is in your bank account to cover it, because if it's not, the card will be refused. But credit cards go through your bank account once a month, so you've got a bit of time to think about. However, I think it's essential, particularly in the early years, that you set up the card with a direct debit linked to it, which clears the whole balance every single month. If you need to borrow money for some reason, then piling up debt on a credit card really isn't the right way to do it. The interest rates are completely crazy for a start, and all your work on your budget is completely pointless if you get to the end of the year with a 10,000 balance on your credit card, which you can't pay off. Your monthly payments then probably wouldn't even cover the interest charges after that. So use your credit card sensibly and pay off the whole balance every month until you really are comfortable with using credit and you're sure that you can pay off the money that you're spending. There's another really important advantage in using credit cards, and a lot of people don't know about this. If you're a victim of fraud and you've paid with a credit card, you've got automatic protection. That's not the case with a debit card. If you buy something online and it never turns up, or if you're the victim of a scam, paying by credit card usually guarantees you get your money back. But that is not the case with a debit card. Running a credit card sensibly will also give you a credit score. Now, you're going to need a credit score. You might want to take out a loan for a car, or maybe to buy an expensive instrument, or you might simply be applying for a second credit card. If you've never used credit, then you won't have a credit score, and that might mean that your application for a loan or for whatever it is will be refused. Even if you don't really like the idea of credit cards, it does make sense to get one. But remember what I said about a monthly direct debit, which clears the entire balance on the card every single month. On the other hand, of course, if you have your first credit card and you make a real mess of it by getting over your limit, for example, or by failing to make the minimum monthly payment, then your credit score will be a disaster. And it would have been better if you'd never applied for one in the first case. Credit cards can ruin your life. Just don't let it happen to you. Pay off the whole balance every month. I've never, ever not done that. And I've had credit cards since I was 23, and it's been great. They're really useful, but pay it off every single time. How are we doing? Okay, that gets us down to my favorite subject, which is income tax. I assume that some of you have been following my Musician Survival Kit series of talks, which I recorded before Christmas and in January and February, and particularly the ones on tax that were broadcast, I think, in March. If you haven't listened to them, they are still available. And if you can't find them on the Guildhall site, let me know and I'll get some links sent around, or perhaps Harry could do that. But there's something like I think 1.5 hours, 2 hours on tax on the Musician Survival Kit, and you ought to listen to it through because it does give you a lot of information. So there's not a lot of subject going through the whole subject again now, besides which we don't have another 2 hours, which is why I'll just go through the basics. And let's start by just having a quick look at how tax works in the UK. And incidentally, if you're not from the UK and you're going back home after Guildhall, then the tax rules are completely different in every single country, even across Europe. I mean, the French tax rules are different from the UK tax rules, which are different from the German ones. So I'm going to give the UK ones, but if you're going back home afterwards, after you finished at Guildhall, you'll need to find out how the tax rules work there for you. The other point is, even if you're going to stay based in the UK, there's a very good chance that you're going to be traveling to overseas countries. And even if you're just there for a couple of days, they may take tax off in that country. So you'll need help from a good accountant if you're freelancing around Europe and around the world in how to deal with the facts that, for example, if you go to Germany and you do a gig, even if you're working for a UK engager, they will take tax off in Germany, and you need to know how to get it back or to get credit for it when you get back to the UK. Okay, so look, some basics on UK tax. First of all, you probably know, or perhaps you don't, that the UK tax year finishes on the absolutely crazy date of the 5th of April. I mean, most countries have a tax year which ends on the 31st of December, but because we're British, we're completely bonkers, and the tax year finishes on April the 5th. So we're just into the new tax year. It started just over a month ago, and we're into the tax year which is called the tax year 2021 to 22. So the current tax year will finish on the 5th of April next year. Now, everybody, pretty well everybody who lives and works in the UK has what's called a personal tax allowance. And for the current year, it's £12,570. £12,570. That's how much you can earn before you start paying income tax. Okay, so if you want to work out whether you've got to pay tax or not, the first thing is to see whether you're earning more or less than £12,570. If you're earning less than that, you don't have an income tax liability. Now, there are some things which don't count when you're working out whether you've got to pay tax or not. Some things, in other words, aren't taxable. The most important ones for you, I suppose, are education grants, awards and scholarships. If you're getting money to help you through your time at Guildhall, then the chances are that's not taxable. It doesn't count when you're working out whether you've gone over the 12,570 threshold. Gifts aren't taxable. If parents, for example, are giving you money to help you through your time at Guildhall, it's not taxable. And there's a misunderstanding here. There is no limit on how much gifts, is that English, you can receive before you pay tax. Yep. Gifts are always untaxable. Even if somebody gave you £1 million, you don't pay tax on it. There might be tax for the person that's giving you the money to pay in certain circumstances, but that's not your problem. So if your parents are giving you, let's say, £2,000 a month to get you through Guildhall, it'd be quite good, 2,000 a month, wouldn't it? If your parents are giving you £2,000 a month to help you through Guildhall, that doesn't count, again, towards your tax threshold. If you inherit money, if, say, great granny dies and leaves you money in her will, that's already been taxed at least 4 or 5 times, so that doesn't count either. And there's one other thing which doesn't count for tax, and that's if you win a prize from the Guildhall while you're a student here, and that prize includes money, then that's not taxable either. So just recapping on that, the things that you don't have to worry about: educational grants, awards and scholarships, gifts, money you inherit, money that's left to you in somebody's will, and cash prizes. Pretty well everything else is taxable. So once you go over that limit, that £12,570, you start paying tax, and you pay it at what's called the basic rate, and that at the moment is 20%. That's 1/5. So once you go over the 12,570, you're going to start paying tax at 20%. Now, that doesn't mean you pay tax on everything. You still get the £12,570 free, and you pay the 20% on your earnings above that. So, I mean, this is unlikely. If you manage to earn this year £12,571, you've gone £1 over the tax threshold, and you would owe tax of 20% of £1, which is 20p. and they'd come and ask you for it and expect you to pay it. So you still get the £12,570 tax-free, and you pay tax at 20% on your earnings above that. If you earn more than 50,000, let's be precise, £50,270, then the tax rate doubles. It goes up to 40%. But again, that doesn't mean that you pay 40% on everything. It's only the earnings above the £50,000 where you pay at the double rate. So if you were to earn £60,000 this year, it might happen. If you were to earn £60,000 this year, you wouldn't pay tax on the first 12,570. You'd pay 20% on the money between that and 50,000 plus, and then the income above the £50,000 limit up to the 60,000, you'd pay at 40%. And there's a top rate, which is 45%, and you can start to worry about that when you're earning more than £150,000 a year. I hope you get there one day. I haven't made it yet. You've also got to pay national insurance, and national insurance is actually worse than tax. It's worse than tax because it starts when you're not getting anywhere near that 12,570 limit. It depends where your earnings are coming from. If you're in a job, if you're employed, then you don't start paying national insurance until you're earning 9,568. It's a crazy figure. £9,568 is when national insurance starts when you're employed, when you're in a job, and you pay it at 12% on top of your tax. Now, if you're self-employed, national insurance is called Class 2, starts when you're earning only £6,515. That's very, very low. It's about half the tax threshold. So you need to think about national insurance in a different way from income tax. Class 2 national insurance when you're self-employed is £3.05 a week. It's a fixed amount. So we're talking about £150 a year roughly. But when you're self-employed, you also have to pay 9% national insurance of your profit. And that starts when you're earning, this is getting complicated, that starts when you're earning 9,568, which is the same as the employed people. But the important thing to remember is that you become liable for national insurance when you're self-employed, when your earnings are only £6,500 a year. By the way, this is important. I've said this also on the Musician Survival Kit talk, that there are no special tax rules for students. There are no special tax rules for students. I still find people who think that you don't have to pay tax while you're a student. And I'm going to tell a story again, which if you listen to the other talk, you will already have heard. And it was when I went into the academy a few years ago to give a tax talk to the last final year students there. And this guy came up to me after the end of the talk, and he said, I'd like to make use of your services next year. So I said, what? He said, I would like to engage you next year. So I said, do you mean you need an accountant? And he said, yeah. So I said, why not say that? I said, why do you need an accountant next year? Are you going to be earning lots of money? And he said, I'm earning lots of money already. And I said, oh, good, that's very good news. I said, can you tell me what you do? And he said, I'm a percussionist. And I said, good. I said, and what work have you been doing? And he said, I've been deputizing with the Philharmonia Orchestra regularly. And I said, oh, good, well done. I said, how much did you earn this year? And he said, oh, about £15,000. I said, that's very good. I said, and last year? And he said, well, probably about £12,000. And I said, and you need some financial advice next year, not now. Yes, he said, it's fine. He said, because I'm a full-time student and I don't have to pay tax. And I looked at him and he went white. He said, is that not right? So I said, no. I said, you pay tax like anybody else. I said, can I ask what you've done with all the money you've earned from the Philharmonia? And he said, I've spent it all. And he had. He'd actually, and I told him to come around and see me the following week, and it was a complete disaster. He really thought he didn't have to pay tax. He actually owed them about £5,000 or something, and he'd spent every penny. And I said, look, I'll try and sort it out with the tax office for you. And they weren't terribly impressed with the fact that he thought he didn't have to pay it and he'd spent all the money. It took him years to pay it off. No, look, the tax rules apply to you now. Some students, you may have friends, are actually earning quite a lot of money already, and they have to pay tax. All right, there is no special exemption just because you happen to be a student at the Guildhall. There's one other thing you need to be aware of, and that is that if you are paying your own fees at Guildhall, that doesn't mean that you don't pay tax because all the money is going to your college. Yeah, you earn your money, you pay the tax on it, and then you use whatever's left to pay your fees. I met someone at the Royal College of Music last year, and she got it the wrong way around. She thought that you earned your money, you then paid your college fees, and you paid tax on anything that's left over. No, it's the other way around. The tax is calculated on what you earn before you pay your college fees. I don't know if that applies to any of you, but please don't get it the wrong way around. Yeah. Okay, let's just talk very, very briefly about how the tax system works. If you're employed, if you have a job, full-time or part-time, as I mentioned earlier, the tax is taken off at source by the person who employs you, by your employer. There's a system called PAYE. It stands for pay as you earn, and that's exactly what happens. Yeah, before you get your monthly salary check or whatever, the tax is taken off. And that is great because it means that you can spend all the money you can get without having to worry about saving up for tax. At the end of the year, you're given a little certificate called a P60, and that tells you how much you've earned and how much tax you paid. And that is sort of your promise that you've paid the right amount of tax. The only problem with being employed is, on the whole, you can't claim expenses to reduce your tax bill. The only expenses you're allowed to claim are expenses without which you wouldn't be able to do the job. And for most people who work, everything they need to do their job is supplied to them by the employer. So if you go and work in a factory, they give you all the machinery you need. Now, interestingly, music is one of the exceptions, and it particularly applies to orchestral musicians. If you go and get a full-time job in an orchestra, then of course they don't give you the instruments. It's not like the Vienna Phil where they come out of a big safe and they're all 200 years old. You have to provide your own instruments, and you have to provide funny clothes we still have to wear in concerts. So music, and orchestral music particularly, is one of the very few cases where if you are employed, you can get your tax reduced because you've got to buy the stuff that you need to do the job, but that's unusual. Self-employment, freelancing, gigging, call it what you like, is completely different. Pay as you earn, PAYE, tax being taken off in advance, can't happen. I mean, it's obviously totally impractical for the tax office to ask all your students to deduct 20% tax and send it off to them every week. It's not going to happen. So as I've talked about so much already, you get all your money, but you've got to save up to pay the tax bill later. The other thing that's different is that you can now claim all your business expenses before your tax is calculated. You haven't got a salary. You've got, you hope, a profit. That's the money that's left after you've paid all your business expenses. So when we're looking at that £12,570 limit, when you're self-employed, it's not that you pay tax when your earnings go above that figure. It's that you pay tax when your profit goes above that figure. So to work out when you've got to pay tax and national insurance when you're self-employed, you add up all your earnings, you deduct all the expenses that you've incurred making your money. And again, go and listen to the Musician's Survival Kit talk because it explains what they all are. And it's only if the money that's left, that's your profit, is above the 12,570 or whatever, that you have to start worrying about tax. Yep. There's one other thing to talk about, I think, on the tax, and that's allowances on instruments and other equipment that you might buy. And it's because there are some special rules here which you need to be aware of. The allowances on things like equipment are called capital allowances, and there are some special options, and they're particularly useful for musicians. If you buy equipment, let's say a flute or a car or a laptop computer, you can deduct those expenses from your earnings before you calculate your profit, just like any other expenses. Or you can choose just to claim some of them if you want to. Now, why might you want to do that? Let's imagine that you've earned £13,000 this year, so you're just over the tax threshold, and you've been out and bought an oboe for £5,000. Claiming that £5,000 is going to take you way under the tax threshold, so you're sort of wasting some of the money. You only want to get down to the 12,500 limit, so you're allowed to claim just enough to get you down to that and save the rest of it up for later years. You can only do this with equipment. Or you can save it all for a later year if you want to. So if you'd only earned £10,000 this year and you bought a viola, you can decide to save up the whole of the cost of that viola to a later year and then claim just as much as you need to then. So you've got flexibility over it. The other two important things are, number one, that if somebody gives you as a present business equipment, like somebody gives you a piano, you can claim that as if you'd bought it yourself. So if Granny gives you a harp for Christmas and you play the harp professionally, you could claim the value of the harp that she gave you just as if you'd bought it yourself. And the other really important thing is that you can claim for all the instruments and other equipment that you already own when you first become self-employed, as if you'd bought it yourself that morning. And that can keep you off tax for quite a few years. So if people have been giving you musical equipment, instruments, cases, metronome, music stands, all the other gear that you use, if people have been giving you things like that for Christmas for the last 5 or 10 years, and you've still got that stuff, you can claim what it's worth now against tax as if you bought it yourself. That's really important. And if you go to a professional accountant, a lot of them forget that rule. And it's worth just saying, look, here's the list of all the stuff I already own. This is what it's worth, and I'd like to claim it against tax. There's only one warning with these equipment capital allowances, as they're called. The tax office assumes that business equipment falls in value as you use it. And of course, for most types of equipment, if you're buying machinery, that is absolutely the case. With musical instruments, of course, it's slightly different. Some of them actually increase in value as you use them. And if you buy really expensive stuff, which is not going to go down in value, then don't claim it, because you're going to be taxed on it when you sell it. And again, you're going to need some specialist advice here. But if you're buying really expensive stringed instruments, for example, then you shouldn't claim them, because if you do, then they become taxable when you sell them. And if they've gone up in value, you can find you're actually spending more tax later than it saved you by claiming it now. But that's a specialist thing, and you need to go and chat to a specialist music accountant on that. That's probably enough on tax. But let's just briefly go back to where we started. Let's go back to that crazy definition of financial literacy again, or as whoever did the blurb for this talk spelt it, finankical, which I think possibly was Darcy or Henry, I'm not quite sure. Anyway, financial literacy, that long definition, is said is the foundation of your relationship with money and is a lifelong journey of learning. Well, yeah, I suppose that can be right. But look, let's put it more simply. You need to know what to do if you don't have enough money to live on, and you mustn't throw away your spare cash if you have more than enough to live on. That, for me, is what financial literacy means. Or just going back to the two words, be careful. Yep. I think that's probably all I need to say. And we can do some questions in a minute if you've got any. I'm doing some one-to-one face-to-face sessions at Guildhall between now and the end of term. And I think that Naomi Nathan is going to be sending some emails round to you, including me, I hope, actually, about how we fix the dates to do this. So if there's anything you would like to talk to me about face-to-face, I mean, it can be about tax, it can be about budget, it can be about anything to do with the music profession, come and see me for a quarter of an hour or whatever. face to face. I suppose we've got to put masks on, but we can break the rules in private, I suppose. And so we can have a chat about anything that you need help on. Otherwise, if you need help straight away and you don't want to ask questions now, feel free to email me on my Guildhall account, which is trevor.ford@gsmd.act.uk, or ask Harry for my personal email address. Harry, I don't know if you're like me. I check my Guildhall emails about once a year. I check my personal ones about every hour. So if you really want to get hold of me quickly, ask Harry for my email address and just send me an email. And I'm happy to sort out anything you need to have help with relating to money or tax or any other advice. And we'll take it from there. God, how long's that? That's 55 minutes. That's probably enough, isn't it? Harry, shall we take it from there if anybody's got any questions? Is that the sort of thing you're hoping for?
That's perfect. That's brilliant. Thanks so much, Trevor. Actually, I have a question. If I can start off proceedings, actually, it's regarding the accountant thing, because I remember this kind of coming up in my fourth year when I came to your talks last year, and I suppose one of the things is what kind of stage do you kind of get an accountant at? Because I suppose it's everyone kind of thinks about tax quite as they come into the end of music college, like the example you gave earlier. And everyone kind of thinks, oh, I'm not even earning enough to get to get an accountant.
Yeah.
But what kind of stage kind of would you recommend on getting an accountant? I guess.
Possible, really. If the accountant says there's nothing to do yet, then they won't charge you for it. But if it's funny, actually, I had a friend a couple of years back who was investigated in their first year out of Guildhall. They picked them at random. And they had quite a rough time, but they had a very good accountant who basically said to the tax office, "Go away." And they said, "Okay, we'll do it very quickly." And he got them through it in no time at all. Had you been on your own, I think you'd have been a bit scared by it. So having somebody right at the beginning who is there when you need help is actually worth setting up. Yeah. It's not that you need an accountant when you've got lots of money. It's actually you need an accountant when you haven't got lots of money. I mean, I've still got a few private clients. Some of you don't know, before I went into music, I trained as an accountant when I left school. It was brilliant. I did 3 years of it and then I ditched it and went to the academy. But it's been really, really helpful. I know how money works. I was contacted about a year ago by one of my ex-students from Guildhall who said, could I look after her as an accountant? And I thought, Lee, I'm not really doing it much these days, but I said yes. And the first thing she needed was a reference for a new flat, the landlord. And I did that, and they because I'm a qualified accountant, they accepted the reference. If she hadn't had an accountant, she would have had a hell of a time getting the reference quickly that she needed. She probably would have lost the flat. So it's not just about tax, it's about mortgage references, it's about flat references, it's about dealing with all sorts of bits and pieces to do with money, where you just need possibly a shoulder to cry on or someone to help you out when you've got a problem. And if your accountant doesn't save you as much money, to cut more money than the fee, I suppose is what I'm trying to say, and then they're not really doing that job. And it really is at the beginning when you need the help, getting set up the right way, like that thing about knowing how to claim instruments that you already own and all that sort of stuff. So I always say, go and find an accountant straight away. And if it's a good specialist accountant who's not trying to fiddle you, that's a bad word to use, sorry, then they should tell you, you don't need me yet, but I'm here if you need me. Or they'll just get your tax reference set up for you and that sort of thing, and then say, okay, come back in a year or so. So sooner rather than later. If incidentally you need recommendations for good accountants who I trust and who I know won't rip you off, email me and I'll send you a list. There are a number of accountants out there, one of whom actually was a former student of mine at Guildhall, who are now working as full-time accountants, even though they originally trained as musicians. It's amazing what musicians end up doing. Don't think you're only good at music. You're not. You're good at all sorts of things. And if you decide that you'd like to carry on and keep music as a hobby or something you actually really enjoy rather than having to use it in a slightly unpleasant way, which is relying on it for earnings, then go and do something else. I mean, I've got musically trained friends that I was students with who are barristers, accountants. I've got someone who works making jet engines, but they all keep the music going in their spare time. Lots of medics are really good musicians. I mean, a number of people from the National Youth Orchestra who go off and do medicine but are actually probably as good at music as they would have been if they'd gone to music college. So go and train as an accountant. We need you. But if you want advice on who to go to, drop me an email and I'll send you a list of good suggestions. Yep. That was a very long answer, Harry. I'm sorry.
No, it's perfect. So I'm not sure, Andrew, you were nodding with question. Did you have a question at all?
Yeah, I did. I'm not sure if it's an easy one or a hard one, so I'm sorry about this. But I did want to ask, is there any reality in which a self-employed musician freelancing can convince a mortgage lender to give them a mortgage?
Absolutely. And again, if you need a good mortgage advisor, I've got a very good one who was originally a professional trombonist. And he saw a gap in the market because he couldn't get himself a mortgage, and he went and trained as a mortgage advisor, and he gave up the trombone. He plays amateur now, and he's a very, very good mortgage advisor specializing in freelance musicians. Yes, it's not a problem. They will want to see that you've got 3 years of earnings, and they will want to see that you're making a reasonable profit. There's a misunderstanding, I think, with getting mortgages. The people who lend mortgages, which is mostly banks, want to lend as much money as possible. There's no reason why they should not want to lend money to you. The only risk for them is they might not get the money back. So all they're worried about is lending money to people who are relatively safe. So the one thing they don't want to happen is that they lend you money and then 6 months later you ring up and say, I'm terribly sorry, I can't pay the mortgage anymore. And that's a disaster for you because you lose your house, and it's a disaster for them because they lose the mortgage money. Although actually they get it back because they sell the house, and they're safe. So the main reason, to be honest, that people don't lend to someone is that they don't think they can cope with it. And that's actually a good thing. The mortgage companies always get their money back, I promise you. So if you can't get a mortgage, it usually means that in the view of the experienced mortgage lenders, you're not actually earning enough to be able to afford it yet, even if you think you are. That's how it works. So it's protection for you. They always get their money, but you always lose your house. So coming back to the first question, yes, it's no problem. I've had over the years hundreds and hundreds and hundreds of freelance music clients who've got mortgages, including myself. Yeah, I just paid off the last one last year, thank God. So it can be done. It's absolutely not a problem, but they will look very closely and they want to know that you've got a good track record. But again, if you need an advisor, let me know and I'll put you in touch with a specialist music mortgage finder.
Trevor, that question on credit cards earlier,
Yeah.
I've always been fascinated by the whole credit score kind of system.
Yeah.
And my flatmate in second year, I think, got a credit card and was paying something off. Like she would make a purchase of £5 every month, pay it off. I'm not sure, is that a myth or something where you can do that, pay it off every month, and then it builds up your credit score slowly, or is it a thing that you can just apply for a credit card and get it and then not spend any money and that will build it up anyway?
No, because it's all computerized. So whether you spend £1 or £100 every month, it all goes in. All that the credit score looks at is have you had a credit card? Have you borrowed money on it? Have you paid it off? I mean, even if, to be honest, but I wouldn't encourage this, even if you don't pay the whole thing off, but you've managed to pay the minimum amount every month, that will also go towards your credit score because it shows that you're using the credit card properly. What wrecks your credit card score is if you default, as I said earlier. If you go over your credit limit regularly, or you don't pay anything every month and you get taken to court. But yeah, if you get a credit card, spend a month and pay off £5 a month, that will start to build your credit score. The important thing, though, I think, is certainly at your stage, and even at my stage actually, is that you pay all of it every month, and then you get all the convenience, but without the risk. The danger is that you think, oh, I've got a credit limit of £12,000, I can go and spend £12,000. No, again, they're lending you the money because they can't lose. Yep.
Is there any specific kind of credit card companies that you'd recommend for kind of students?
No. There are some credit card companies out there who will give you a credit card when nobody else will. And there are 2 or 3 out there who specialize in that sort of scenario. But that is mostly people who have defaulted on a credit card previously or have got a duff credit score. Now, but what you, and of course, the way they make their money is by having crazy interest rates, because they will assume that people who are not good at financial management are probably going to run over the limit, and then they can make their money by charging double what anybody else does. Now, I suppose the thing to say, therefore, is if you try and get a credit card and you can't, then there's no harm in shopping around for one of these credit cards, which is for people who've got problems with their credit score, but then pay it off every month and they don't make any money out of you. But again, it will start to build your credit score.
And so I'm not sure if anyone else has any questions, but I'm just going to keep going until someone butts in.
How many of you got picked up here?
Yeah. What are your kind of thoughts on apps like QuickBooks and stuff like that that kind of track your? Oh, because it's only because I've recently downloaded QuickBooks as a kind of just a trial and see what it was like for keeping track of kind of business expenses, and I've had to turn off the notifications pure because every time I get the tube, it literally lets me know. It's just like you could claim back £1.44, whatever it is. But I'm not sure what your thoughts are on that.
Yeah, I use QuickBooks as well.
Right.
To use the app in that way. When I was a student, because the way we used to have to do it was you got all your receipts and you wrote them all down by hand in a little book which you carried around with you. Then you lost the book. Then it gradually went on to spreadsheets, and then it went on to software programs, and now we're going on to apps. They are great, provided that you don't do something disastrous, like record all the receipts on your phone and lose the phone. And I've had so many people who have rung me up and said, I've had a terrible disaster today and my phone was nicked and I didn't have a backup. So I think things like QuickBooks are good because it's all stored online for you and it does work. And I don't know if you know this, but in 2 years' time, the tax office is saying that everybody has to submit their accounts every 3 months rather than once a year. So it's going to be a complete pain. We're going to have to submit details of earnings and expenses 5 times a year rather than once a year in future, starting 2 years from now. So get ready for that. It's going to be really, really good. You're going to spend more time doing your accounts. You are going to be playing your instruments or singing or whatever you do. So I want to give up in advance of that because it's going to be a complete pain. But if you have got an app whereby you just photograph your receipts and it automatically codes and sets up your accounts for you, then by then it's going to be very, very useful. There'll be a lot of these appearing in the next year or so. There's already quite a lot out there. Again, if you're going to an accountant, you may well find that your accountant will recommend a specific software package or app or whatever, which he or she is used to working with. And I would always take your accountant's recommendation because if it's one they're familiar with, A, they might get you a discount on the cost, B, they'll know how to deal with it if problems arise. Yep.
I'm not sure if anyone else has any questions. Do they?
Somebody else? No. Monica. Michael.
Sorry, I was going to ask maybe just one quickly on income tax. I kind of get the concept of only paying tax on your profit.
Yep.
Right. And then you can deduct expenses from that. And presumably you then go to HMRC and say, these are my expenses, these are my receipts, blah, 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 blah. And you sort of
let's just pause you there for a moment. You don't go to HMRC. Right? They will come to you if they want to know that information. You give them 2 figures. You say, this is what I earned, this is what my expenses were. 2 totals. One minus the other is your profit. If they want more information than that, they will ask you. But they are so snowed under and that they're buried in Brexit at the moment. They've transferred all the tax inspectors over to the Brexit department. It's great. So they are very unlikely to ask you for that detail, first point. But yes, you carry on, but you don't go to the tax office and say, these are my expenses. You say, on your tax return, you give a figure. That's the end of the story, normally.
Sure. Actually, that sort of semi-answers my question, because what I was going to say is, do you have to almost prove that other earnings are not taxable? So would you have to justify that gifts are gifts?
Yeah, it can well happen. If they decide to look at you, and again, at the moment, they're not doing any spot checks, but in normal times, they are spot checking all over the place. And if you get picked, then the first thing they will do is to ask for your bank statements and your credit card statements, and they will compare the money that you say you earned as taxable and other money on your bank statement that's come in, and they'll ask you what all the other stuff is. And if you can't prove it, they will say, well, let's assume these are earnings. So if your parents are giving you X pounds a month, then your parents will have to write a letter to the tax office saying that all these items on the bank statements are gifts from me. They would say, what's this £50 here? And you say, that's the present for my girlfriend last Christmas. And they'll say, okay, I'd like a letter from your girlfriend, just confirm that she gave you £50. So you need to know what every item is that's coming to your bank statement, as well as the earnings, so that if they look at it, you can say, this is private money and I can prove it. Good question, actually. Yeah, that's their starting point. They're always much more interested in the income than the expenses, because if you're going to fiddle it, you're going to fiddle it by, I must stop using the word fiddle, it's so totally inappropriate for musicians. If you're going to defraud the system, you're probably going to do that by not being honest about what you're declaring. Yeah.
I think there's a question from Michael, which is how much should we expect to pay for an accountant?
Good question. The quick answer, I just read, could you get into trouble in this case by using silly references? Possibly. Right, how much do you expect to pay? It depends how complicated you are, first of all. If you are really, really straightforward, straight out of college, working only in the UK, and you've kept good records, and that is really important, because the one thing you mustn't do is to pay an accountant to do something that you can do yourself. That is really throwing money away. Then I suppose the range at the moment is 400, 450, 500 a year. That's for doing the whole lot. It might be quite a lot less. I mean, I've got clients still amongst the few that I've kept who pay me 200, and they basically do the whole job. They write down or they record somewhere all their earnings. They've got all their expenses worked out. It's all added up. They've got all their receipts in the right order, and it's a complete doddle to do. If on the other hand, you are traveling around the world and you're having tax taken off in the USA and Germany, Italy and France and everywhere else, and I've got to do a US tax return for you and a French tax return for you, as I did for somebody last week, then of course the cost is going to go up. The I charge anybody is 4,000 a year, but that's an international star conductor, and he also employs a bookkeeper, so we work together. So, okay. But on average, when you're out there freelancing regularly and you're not desperately complicated, then I would think somewhere 450, 500. That, of course, is a tax allowable expense. So you get tax relief on it, which means that effectively it goes down by 20%. So instead of 500, it's probably 400. And if they're not saving you 400, then they're not doing their job. Okay. Any more? Okay, Michael, thanks. Anybody else? I've got low system resources may affect your audio quality here. Have I got low system resources or have you? I'm not quite sure which end that is. I'm going to close that message. That's crazy. Anybody else? Anybody else? Harry, any more questions from you? You obviously got a long list there. I'm quite happy to sit here all night if you want.
No. It's just I was starting off proceedings. You know how that Zoom calls always like that sometimes. I mean, I suppose I've got one actually, which is I suppose over the summer I'm doing a couple of things in France and Switzerland, and I'm not sure what the taxings are like out there. Whether are they normally taxed before you get the money, or is that something? Well, I mean, obviously you keep receipt of all your money that comes in, but.
Harry, is this after you've left Guildhall, or are you?
I've technically already left Guildhall. I'm technically employed on a weird system by Guildhall.
Yeah. Oh yeah, yeah. One of my students from a few years ago was student union president. She told me how much she was making out of it. It was quite encouraging, actually. No, it's not true. It's not true. Right. Free beer for the year. It's almost impossible to answer until you actually get out there and find out. Are you? Let's answer you a personal question. Are you registered as self-employed in the UK yet?
Yeah.
Are you paying tax yet?
I actually only recently registered as self-employed.
Okay, so you haven't paid anything yet?
No.
Okay, so the way it will work, because you're registered in the UK, there is what's called a tax treaty between the UK and France and between UK and Germany and most countries, and they're all slightly different, but basically that they set out the rules about what happens if somebody who lives in one country goes to another one where they've got a treaty. And basically what it says is that you're taxable in the country in which you live, but that doesn't mean that they won't take tax off in the country you're visiting, but you then get it credited when you get back home. Now, let's give you a slightly simplified example of how it works, okay? The basic UK tax rate is 20%. Some countries it's more than that, some countries it's less than that. Now, I'm going to make up overseas tax rates. This isn't genuine. If you went to France and they took off no tax at all, then you would be taxable in the UK on that money, just as if you'd earned it in Brighton. If you went to Germany and they took off 15% tax, when you got back to the UK, you'd have to pay an extra 5% to bring your tax up to the UK threshold. If you went to Italy and they took off 30%, when you got back to the UK, you would owe nothing extra, but you wouldn't get back the extra money the Italians had kept. That's basically how it works. That's very simplified, okay? But the other thing about that is if you're traveling around the world on a self-employed basis, then all the expenses connected with traveling, so the fares, the hotels, the meals, everything else, are your business expenses, just as if you had gone to Brighton. Doesn't matter where you go, the world is one place as far as the tax authorities are concerned, but you do bump into problems where people take tax off in the country you're visiting. Is that sort of clear?
Yeah.
The answer for you is, God knows what's going to happen. But what I suggest you do is, when you're out there, if you find something's going on which you don't understand, drop me an email and I'll tell you what's happening.
Yeah, that's probably best. I think, what was another question? Nazli's asks in the chat. She's only recently joined. Cool. I've recorded it anyway, Nazli, so you can go back and watch it. And as well, there's few other talks called the Musicians.
Yeah, who's watched the Musician Survival Kit talks? Anybody? Right. I hope they were helpful a bit.
We've been sharing them on the forum page as well. We've allowed them to be public to the students of Guildhall.
I say it's been a really miserable experience recording them without actually having any real students in front of me. I mean, I've gone through the whole year without seeing anybody, and because I recorded them in the recording studio rather than doing them on Zoom, I couldn't even see anybody when I was recording them. And between you and me, it's not a thing to do online. They had a complete disaster when we were recording. They actually managed to wipe 6 talks before they'd actually broadcast them. And then for another one, because the studio was so busy, they put me into a classroom with a camera. And it's one of those rooms where the lights go off if you don't wave your arms around for 5 minutes. So I'm trying to record this thing and doing this, So we wiped that one as well. So it actually took me twice as long as it would have done to have come in the Guildhall and done them properly. I'm just desperately hoping that when we get to September, we're all going to be back to normal and that can come in again. And that's why, by the way, it'd be lovely if any of you would like a one-to-one to come and see me, just so I've got an excuse to come into Guildhall and actually talk to somebody. I mean, it's been really desperate, stuck on the end of a camera for a year.
Anyway. Leslie also mentioned about a reference guide. I suppose, is there any online resources? I'm guessing that's what she's trying to get at here with any reference guides online, I suppose, which is a guide for taxable expenses.
Again, email me, and if you like, I can send you I wrote a tax guide a few years ago for the college, as the RCM, and strictly speaking, it belongs to the college, but I'm sure they would never notice if I sent a copy to a couple of students at the Guildhall. I updated it yesterday for them, actually. So if anybody would like a copy of the Royal College of Music's tax guide, just very discreetly send an email to my personal email address, Ask Harry, and I will accidentally send you a copy of the Royal College of Music tax guide, which basically gives you all the rules about how it works and helps you claim your expenses. Happy to do that, but don't spread it around a bit, okay? That might be useful. So I could do that. Otherwise, lots of accountants have online resources themselves. They either write them themselves and put them on their own websites, or they subscribe to an organization which provides free ones for accountants. The only trouble with those is they're not usually specialist ones for musicians. So it won't say, if you go and join the CBSO, this is what happens with your tax allowances. So that's a specialist accountant job. Or me. I mean, if anytime you need help, email me. I don't mind whether you're still a student or not. I've still got people from 20 years ago dropping me an email occasionally and saying, I need some help. I'm more than happy to do that as long as I'm around. So another 40 years, whatever.
if there's no other questions, I guess we can kind of wrap it up there, unless anyone has any burning questions. But as Trevor said, I can if you email me and I can pass on the personal email of Trevor's. That's very kind of you to do that. Thank you. The session's recorded, so this will be on the forum page as well for other students to listen to. But unless there's anything else you'd like to say, Trevor.
No, I think I'm done. Apart from the be careful thing. Yeah, I mean, money's nasty stuff, and we're stuck with it. We can't operate without it, and it can be great, but just particularly in the early years, don't get yourself in a mess, because if you muck it up at the beginning, you never get it right later in life. That's a pretty miserable thing to finish with, isn't it?
Okay. Thank you so much, everyone that turned up today, and if you're watching this on demand, I guess, thank you to Trevor as well. Thank you for coming along and to speak to us.
Okay, my pleasure. Nice to see you all.